Okay, and in this week's podcast, our episode is what are the core CFO competencies required of a world-class financial organization? And I'm thrilled to introduce Tom Garrett, CEO and founder of TLGarrett, executive coaching and consulting. His experience includes Fortune 500 CFO for LTV Steel and service merchandise, and over 25 years of CFO experience in PE and public companies. Tom is known for leadership, developing people, building teams, negotiation skills, as well as multiple M&A transactions in media, BPO, retail, and the mining industries. Tom, we are just dear friends. This is not, this is not a podcast interview. This is a conversation among dear friends, and I'm so thrilled. We're separated by states, but not in a heart. So I'm so happy to have you here, Tom.
Oh, it's a delight to be with you, Richard. I was, just so pleased that you thought of me to invite me to this. And you are indeed a dear friend. And though we are separated by, miles and time between we see each other, I so enjoy your friendship.
Likewise, Tom. Thank you for that. All right, so we'll dive in, and so we're going to understand the CFO competencies really as a representation of the OCFO, the Office of the CFO. So let's talk about foundational skills, Tom. So could you start by defining what you see as core competencies required of a world-class CFO? And as part of that, how have these skills evolved over the years, Tom?
Sure. Yeah, I've actually given a lot of thought to this subject. Last number of years. And I would say that there are probably 12 key core competencies for a CFO. And many of them may overlap. Some of them are technical competencies, but others that really rise to the top are communication skills and relationship skills. And so I'll just read a quick list of these. The number one I would say core competency necessary for a successful CFO is the relationship that he or she builds with the owner, founder, board, private equity owners, and the kind of reporting they are expecting that will truly add value to them. That is an absolute critical core competency for a CFO. The second is, just as importantly, the relationships with the CEO, the COO, and the other senior leadership team, relationships and expectations. How are they expecting you to add value to them, to their decision making, to the financial story that you can tell? And I think, what I call, the equivalent title to a chief financial officer is chief storyteller, because the entire organization, many of those outside constituencies are looking to that CFO to be able to tell the story in a clear and articulate fashion in a way that truly communicates, explains, and clarifies the financial performance of the company, as well as how that might be applied going forward to decision making. Now, within those technical competencies, or within the technical competencies, of course, you have operations finance, you have budget and forecasting and reforecasting, FP&A, the core, accountabilities of accounting, financial statements and audit. But then you add to those within that, sphere of responsibilities that a CFO has, you also have treasury, cash management, and corporate corporate finance, financial fundraising, financing deals, debt and equity, tax, which is huge for any kind of company, M&A, if the company is growing not just organically, but through, acquisition, but then strategic thinking and those communications and being a team builder and leader are all critical in terms of the core competencies that comprise what a really world-class CFO should show mastery of.
Wonderful. I love that, Tom. No, thank you for that. You said a number of times there were some really important softer skills, quote unquote softer skills, right? Which really kind of differentiate the stronger CFOs and maybe the rest of the pack, so to speak. So let's talk about that continuum though, because you know the function has evolved over the years, all right? So how important are companies like strategic thinking and business acumen vis-a-vis and compared to the traditional financial and accounting and kind of FP&A reporting skills of the past, right? So we're moving from kind of a little
Sure.
bit of, for lack of a better way of describing it, command, control, and reporting to really being a business partner. Just talk a little about that evolution over the past few decades.
Sure. Well, as I look back over my own career, um, my earliest, let's say, CFO roles, very much focused on the reporting, the accounting, and so forth. However, what we have seen, I think, and it's partly market driven, but also partly as one matures as a CFO,
Yeah,
one realizes that the accounting and reporting is a fundamental, say, building block for everything else. And that is, it's critically important for compliance, for SEC reporting, if you're a public company, for the investors you're reporting to or private equity. But it really, as it informs FP&A and the kind of assessment of risk for involved in the various operating and financial decision making that you are faced with as a CFO, they take on importance as they are used effectively to develop the story and the decision making processes that you put in place and the disciplines around those decision making processes. So to me, um, FP&A, the strategic thinking that you bring to the senior leadership team, to the CEO, the board, um, far eclipse the importance in the role of the CFO beyond just the reporting and the accounting.
understood, understood. And a little bit more about that balancing act. This is really around the context of strategic leadership, Tom.
Yeah.
There is a balancing act, and I like your perspective on how does a CFO balance the need for financial prudence
Hmm.
and risk management with the need to drive growth and innovation within an organization. It's always the tried and tested conversation. What type of CFO do you need? What's the organizational structure? Where is it in its level of maturity? Let's hear your perspective on that. What's the balancing act, and how does a CFO do that?
Yeah, sure. It's been fun to go into companies and as I begin to work with whether it's sales or those who really want to drive growth and innovation and so forth, they are somewhat surprised by they look at me and they go, "You aren't typical in that you aren't saying no to everything." And to me, I know growth is absolutely essentially if you want to create wealth, if you want to be a successful company, and if the company is driven with a sense of passion that starts at the top and goes all the way through the enterprise.
Yeah.
Um, However, it is a balancing act, and I'm so glad you act. And I love the word prudence because you can purse your lips and say prudence, and you get a sense of, hey, that is a role of the CFO, and that is bring balance to the conversation. You can't just be a cheerleader for everything, let's say, sales wants to do, or even a highly innovative CEO. You can't just say, oh, yeah, let's go for it. Now, the way one tempers that as a CFO, but with a mindset that, hey, guys, I'm not here to just say no, but I do want to put some rails around the yeses. And where you have a green light, there are also some limitations that you need to observe. Those have to be assessed by a couple of things. One, what is the level of risk and the level of reward that is possible from a given decision and a given investment? So one, good solid analytics around what is being proposed in terms of risk and reward. The second is, what are the realities of the balance sheet and the financial structure of the company? Do you have the capital to invest in that? How much runway do we want to give this before we say, no, that is a failure? And one of the best things, best speeches I've heard on assessing failure recently was at the Global Leadership Summit. Professor from Harvard, Amy Edmondson, has written a book on failing intelligently. And what she points out is when you take measured risk and you know this is how much I am willing to risk, and if I fail, it will be an intelligent failure because I limited the impact and scope of what that outcome could be on a downside basis. And so I think it's important as a CFO to exercise that level of leadership, framing things with good analytics, upside and downside, creating rails around what constitutes a test before we put everything at risk, and evaluating what kind of financial capacity do we have to absorb a failure, how much financing will this project need, and do we have the wherewithal to fund that either with internally generated funds or the capacity to raise it either through debt or equity. And, clearly the financial covenants that you might be living under before you launch the project need to be clearly understood and modeled into that, because the last thing you want to do is breach one of those if something goes south, or even as you launch it, you don't really have the flexibility to launch that particular growth project.
Absolutely wonderful. I love that. Tom, we are getting deeper now, and as friends, we're going to go off script a little bit. So you expected that. Now, so Tom, when we let off, we said the relationships with founders, entrepreneurs,
Yeah.
full of the kind of more visionary DNA.
Yeah.
And CFOs are trained to have more kind of risk filters, just part of our training. Um, you know, you get into different ownership structures, maybe, venture capital, PE, and so forth. How do you balance some going into those companies when you've got the visionary founder and entrepreneur who really is aggressive and wants to go after everything?
Yeah.
And here's Tom and Richard trying to kind of pull back the reins a bit. Certainly not be Debbie Downer or anything like that. I mean, give the audience some of your kind of your wisdom bites about how you are able, have you been able to do that in your history and your experience?
Yeah, sure. And I think it's especially in the DNA of the entrepreneurial founders
Yeah.
who want that latest shiny thing
Yes.
and are encouraging you figure out how to do it, right, as the CFO. Those are the ones where the conversations may be the most difficult, simply because that level of enthusiasm typically really does not like to be, let's say, held back by a dose of prudence. And nonetheless, it's really necessary. And I think that, the way that I have tried to present when those kinds of conflicts arise is one, stick to the facts, right? Because they, by nature, can be emotional and passionate about
Yep.
what they're trying to do.
Yeah.
And by sticking to the facts, I mean having good, solid analytics that say, if you continue along this path without X materializing, this is going to be the outcome. This is how much runway we have in cash. This is how much runway we have before we have a breach of our financial covenants. This is how much inventory is building because despite the development of this product, there is woefully insufficient sell-through, and we have orders coming from China in 6 months that are going to triple inventory yet even more. So those are the kinds of conversations where it's just so important not to become emotional. And the other thing that I like to use as a tool in those conversations is what I call the what questions. When you ask an individual, why did you do that? It evokes an immediate emotional response. Whereas if you ask a what question, such as, what are you thinking in terms of prompting this decision? It engages the rational side of the mind, and therefore it doesn't become a contest of emotions. Instead, it's an engagement in two views over a very rational discussion. That's the objective. So those are the kinds of tools that I try to use to, let's say, inject some prudence when there is, let's say, high levels of enthusiasm for a new project that, your own analytics are showing, hey, there's a high level of risk here, or we're going down a path that's going to have a very negative outcome.
Now we're getting into the realms that I really want to hit now, Tom, because this is really about executive and leadership attributes, right? And you mentioned asking the right type of questions.
Yeah.
The why questions evokes a different kind of emotion than a what question. So I love this. And you've been fabulous at this, and you've got a practice around leadership and executive coaching. So I want to start to kind of delve into that realm. Before I do that, let's go the other way with that prior question. Let's say we've developed a budget. We've got a 3-year strategic plan or 5-year strategic plan. We've kind of set things in motion, maybe a forecast, etc. But now the executive team comes to Tom or Rich and say, we got to take a bet. Tom, there's this tech we got to implement, or there's a strategic acquisition which hasn't been planned for, and we've got our kind of risk filters on. But now there's a risky bet out there, or a growth budget or something. How do you deal with that, Tom? How have you dealt with that in the past?
Yeah. I think the same principles are involved in that you have to take it in and listen very, very carefully. And I
Yeah.
think listening is such a key part of being a good CFO. One cannot interrupt before they're done presenting their idea. One, sit back, listen, take as much in as you can, start to formulate questions that will provide the foundation of developing a full understanding and even a modeling of, okay, what will this look like? What kind of capital will this acquisition take? Is this a strategic acquisition that will complement our current base, provide synergies where we can cut other costs, either at the acquired company or our own company? Does it advance our place in a specific market or group of markets for our products? Or is this um, a different type of acquisition that goes into an adjacent product category or a completely different one? What is is the level of EBITDA margin complementary or dilutive to the acquisition or our current operations? I worked for a company here in Austin, Mood Media, whose prior administration, let's call them, prior management team, we were running in North America 30% EBITDA, 20% EBITDA overall. But they went on a buying binge of acquisitions that had 5 to 8% EBITDA that made absolutely no sense whatsoever and were highly dilutive, and nor were they, let's say, strategically accretive. And those are the kinds of things you want to develop, to apply filters and decision-making filters, if you will, to those who are coming up with the idea, so that the enthusiasm has to be combined with good critical thought and good analytics. And then when you have both and both are positive, you go, yeah, this is really well thought out. Let's all get behind it. Or you say, these are all the things that could detract from the kind of value you're trying to create or even the growth you're trying to create.
Perfect. Wow. Lovely. Well done there. That was nicely done. Tom, let's talk about leadership qualities now, right? So what are the leadership attributes? What are the ones that are essential for a CFO to effectively lead a financial organization?
Sure. And I think that, as you look across leadership attributes, there are a number, I think, that are very common across just about any kind of role as one matures in their career. But for me, the ones that I have embraced and feel that are very, very important. Um, and these would be in addition to being a strong and candid communicator and holding people accountable. But I'll read the list of the executive and leadership attributes I think are also important. Adaptability. Can you quickly adjust to change? Because if you are a CFO, you are being met with change all the time.
Yeah.
So you have to be adaptable. You have to have a high level of discernment and understand the real issues. Can you sort through something that maybe it's been your pet project or maybe your pet perspective? Can you discern what the real issues are and communicate those to the other decision makers? What kind of perspective? Can you have a vantage point beyond your own that you would develop? Can you sit in the seat or put your mind in the space of the head of sales or HR or marketing? And can you see their perspectives? So perspective is important. Communication, of course, links to everybody in the organization. I think the concept of security. Do you find identity in your position or not? You're better off if you don't, although that's very hard to do. Those of us who've worked, much of our career to become a CFO are mighty proud of that, right? But if you don't find the biggest part of your identity in that role, you can be a healthier person. I think servanthood too. Do you have a servant mentality? To me, this is big because as a Christ follower, we're called to be servants, and those who want to be more seek to serve more. So, do you do whatever it takes and see servant leadership as the best approach with which to lead others and actually role model for the rest of the organization? Resourcefulness, another very key leadership attribute. Do you find creative ways to make things happen? Do you demonstrate the capacity to identify and marshal all the resources necessary to deliver and overcome, deliver key objectives and overcome key obstacles? That is so critical. You cannot be stymied by, oh, this isn't going to work, or a team that comes in and says, hey, we're stumped. Well, let's teach those people, how do you think through, and instead of becoming just a problem identifier, how do you teach them to become solution creators? Because there is a huge shift in the perspective and mindset from a team that can come to you and say, we just don't know what to do, to one you train to say, come in and tell me you're stuck, but give me two alternative solutions that we can talk through. Huge difference in perspective and outcomes. Maturity, do you put the team ahead of yourself? Or are you always number one? Endurance, I think CFOs have to have a certain level of endurance. You and I have both lived through the trenches, so to speak. Can we remain consistent in our character and our competence over the long haul? And then finally, reliability. Can we be counted on when it really counts? Can we keep commitments and do what we say we are going to do? So those, to me, round out a pretty fulsome list of the executive and leadership attributes that are really important, I think, for any executive role, but certainly one for the CFO as well.
I love that list, Tom. I love that list. Let's unpack a few of those. And just in terms of our travels, as you've coached emerging CFOs, emerging leaders, and even the level below that, the vice presidents, the controllers who aspire to get to the kind of CFO spot. Let's pick two or three of those attributes, Tom. And so what would your advice and wisdom be about cultivating those? What does that emerging CFO who's probably, new in the spot and, wants to build a world-class financial organization, or the vice president or controller, et cetera, to get to that spot? How do they cultivate what you would think are the probably two or three most important of those attributes.
Yeah, and one that I think could cut across a few of them is one that I challenged myself with earlier in my career. And that is, as I was preparing packages for the board that the CEO would use or the CFO would use, it suddenly dawned on me what I am so close to the data and the numbers, and I can see things that will help them. How do I elevate what can really be valuable to them as they go into a board meeting? What do they need to know, or what would be best for them to share as part of the story? And so I just thought, what I want to do going forward as I, move up in management and build teams is to train them to think 1 to 2 levels above where they are so that they are always thinking, what can help my boss when they go into a meeting or have to present my analytics as part of a decision-making discussion so that they are best equipped to share the story that I have been in a unique position to develop because I'm so close to the data. And I think that, along with communication, the ability to tell that story, show it graphically and analytically in a way that's easy to grasp, and you are communicating the essence of the most important points that you have identified. Um, I think that communication and adaptability, but then most importantly, that thinking 1 to 2 levels above where you are, being a great storyteller, both visually and orally or in written form, but then also being a solution creator, teaching yourself, hey, I am never going to go into the CEO if you're the CFO, or I'm never going to go into the CFO if you're a VP and just say, I don't know how to solve this. Always go in with at least two alternatives, even if you know they're flawed, because what it does is it forces you to become a true solution creator.
Wow, fabulous, Tom. We are so aligned on those wisdom bites. That's fabulous, fabulous, fabulous advice there. Um, let's because you said it about three or four times, if not five, about storytelling
Yeah,
and
right.
communication. All right. Again, unpack that a little bit and now go down to the first principles of communication storytelling for the emerging CFOs and probably the next level who wants to get up, because that is key. Our
Yeah,
words matter. All leaders' words matter. The
yeah,
CFO is in a very powerful position. Words of a CFO can change an organization like waves. You could whipsaw
yeah.
an organization by saying the wrong word.
Yep.
It's
I've
that
been
close.
there.
Uh, Me too as well, Tom. Probably too many times.
Like, I could have said that better.
Um, go a bit further now, Tom, because that was a powerful list. I love it. You and I completely aligned about what separates world-class CFOs. Talk a little bit about how they cultivate storytelling skills and
Sure.
really sharpen their communication skills.
Yeah. What I challenge myself to do, and this came about when, you've probably been party to producing board decks that are 130 slides, right?
Of course.
And, the finance deck is buried in the middle. And, the feedback that I would get is, Tom, don't bury the lead. You got 20 pages in the finance deck alone, and your conclusions or high level observations are on page 20.
Yeah.
Don't bury the lead. And as ever since that point, as I look through an entire, let's say, the financial package portion of, a board deck, I say, what are the key messages? What jumps out at me? What themes are emerging? Um, and I put those right up front as an executive summary, 1 to 2 pages of executive summary, no more than that. And I have all the key points right there so that even if a board member who will never read all 130 pages, if they do read the first 2 pages of the finance deck, they're going to get the key messages. And, beyond that, when you are developing in a public company format where, the CEO and I would share the quarterly investors call, 120 people, shareholders, rating agencies, buy and sell siders. What are you telling as you write the story of your script? What are you highlighting? What are you pointing out that's really going to inform them as to the good, the bad, and be candid about it? And also, what's it say? What's the indicator for the future? So to me, distillation is the key. Understanding what themes are emerging, what key messages really need to be emphasized to tell the story that you are so close to. And it is that whole thing about seeing the forest for the trees.
Yeah.
You have to step up. Imagine yourself on a drone, stepping up above all those little finance and accounting trees and saying, what do I see down there? And how do I share that in the most meaningful way? And also, the best informs future decision making as well.
Wonderful. So we'll take a minute and share some war stories. I have a war story for you.
Oh, good.
When I first came to the States, I was a youngster, and I was reporting to a CEO. And when you come from England, you write Shakespearean language, and what you can say in one sentence would take me 3 paragraphs. So you know where this story's going. So my first executive presentation to the CEO, he ripped it up and said, son, I know you're from across the pond, but we Americans just want to see white paper. And then he goes, what newspapers do you read? I says, well, the Sunday Times and the Daily Mirror. He goes, read the Wall Street Journal. It could be any business journal. But the reason is they have a highlight and they have a caption.
Yeah.
And when you're doing your executive story, there really is a summary, which is a sentence, which is the key takeaway,
Yeah.
which captures people to, and son, you've got to learn, you've got to learn how to write like that. Otherwise, you're going to be on the next plane back to England.
Oh, that's so funny. Yeah, I have always struggled. I've not been given the gift of brevity. I've known people who have it, but I strive for it. And I say bullet points are they are poetry in finance. It's like, let's make it succinct and take it away, right? So thanks for sharing that. It's a great story. I resemble that remark.
And then, of course, Tom, we've both been through the situation where we've presented spreadsheets in 5-point font on a spreadsheet, and one of the board members got to get out his triple bifocals
Oh
to
yeah,
read what you've just presented. So anyway, jokes aside, okay, people management, Tom.
yeah,
All right, let's discuss the importance of talent management within the financial function. And so
sure.
how should a CFO build and develop a high-performing finance team?
Sure. Just an excellent question and subject. Dear to me, and I'll just share that one of the highlights as I look back on my career is that I've been blessed with a number of really high performing teams. And the identification of the high potential talent within those teams is essential to developing a high performing team. Um, but over the years, 8 of my prior teams have gone on to become CFOs. So I'm really proud of that. It is a great day whenever I hear from any of them who tell me, Tom, you meant so much to my career. I mean, to me, that is wonderful. But I think it goes to, first of all, identifying those high potential people, and then trusting them and delegating to them significant responsibilities, to develop and challenge them to challenge them to develop their own thinking, analytics, but also solutions creation, right? To bring me, at least two alternatives when they run into a problem, to develop their storytelling capabilities. And, not only are they usually really great analysts, but they also know how to present in terms of how do I distill this information into those key messages, into those key graphs that tell the story I want to tell and inform the decision making that those above me, being CFO, CEO, board, et cetera, how do I inform them in a way that will truly influence positively how they feel well informed to make those decisions?
Got it. Wonderful. Okay. All right. And so you've always been a wonderful mentor and coach to the organizations you've led. So
Thank
how
you.
can the CFO effectively mentor and groom future finance leaders within the organization?
Sure. I think that one way is to allow them to see how you work, how you
Mhm.
communicate,
Yeah.
how how you treat people, and how you challenge people, how you hold them accountable, and engage in, or let's say, express an expectation that you expect like behavior in them to what you are modeling yourself. In terms of those levels of accountability, standards of excellence, commitment, as we talked about, those key leadership attributes, communicating those as expectations to them and watching them and then, praising them for how are they doing? Have they been developing those leadership skills of, excuse me, proficiency or technical proficiency, of leadership capability? So to continue the theme around how do you develop future leaders and CFOs is communicate those leadership attributes that you want to look for. And I think delegate a significant amount of responsibility to them, expose them in their work directly to as many other senior leadership team and executives and board as you can. As a CFO, sometimes we can think, or we could be tempted to think, hey, I need to present this. Well, if you're really developing your team, you're going to allow them to present it and be on the hot seat, because what that does is it gives them a much higher sense of ownership about the work they're producing, but it also develops their thinking and both their oral and other presentation skills. They will learn, hey, I have to be clear, I have to be concise, and I need to be a master of this material because I'm going to have to answer questions about everything I've just produced and presented. So I think getting them that frontline exposure is really critical as well. And then holding them accountable too. There are deadlines we have to live with, and it has to be communicated. Excuses just don't fly because I have to deliver this work product, so you have to deliver it to me. And I think that's really critical. So clear expectations, but also praise and that exposure for a job well done.
Absolutely. Tom, you mentioned a great point about exposure to the front line. And in order for the financial organization to be better and more effective business partners, they
Yeah,
must understand the business. All right. It's one thing to have a spreadsheet and to have perspectives and opinions based on a spreadsheet or, financial analysis, but a context behind the numbers. And as you said earlier, putting yourselves in the position of the frontline folks, whether it's sales, the operations, whomever it is, right? It's critically important. What guidance can you give the audience in terms of strategies to get the financial organization more integrated into the business, truly
sure.
understand how it makes money, truly understand, formulating those relationships and so forth? Just provide the plan, say, please, Tom.
Sure. Again, so key to building CFO relationships across the senior leadership team members where, I want to convey, look, I can say it glibly and say, we're from finance and we're here to help. Or I can say, I really want to be your business partner and help you in informed decision making. And as a result, I'm going to assign to your part of the business, whether it's marketing, whether it's sales, whether it is, some part of operations, um, a high potential finance staffer who is got, great upside in their career. I'm going to assign them to you to do your special finance analysis projects, financial analytics, so that before it is ever presented to me, you're going to be working with them and they're going to be your resource. What that does is it immerses that finance person with high potential directly into part of the operation, or part of a support group, whether it's marketing or it's, line operations and so forth. Let them understand what are the elements of the economic formula that govern whether or not that group is effective or not. What are they spending? What are they thinking about doing? What are the projects that that leader is putting forth for them to help evaluate and then elevate in the decision-making ladder up in the organization? So I think embedding people that are high potential directly with those business operators can be a very effective tool.
Absolutely, Tom. And let's talk a little bit about the planning cycles, whether it's strat planning, the annual budget or rolling forecasts, etc. In some organizations, it's finances problem. Let them go come up with the forecast or the budget and tell us what we need to do and so on. And yet it should be an integrated process, right? Strategy, operational, CapEx, whatever, Again, your experience and some of your wisdom Bytes, Tom. How do you enable a truly integrative process? The people who are kind of in the front line running their businesses, understanding, the need for planning, enlisting help, maybe guidance, maybe analytics of the financial organization, and this being a management tool, not just a reporting tool that goes to the board and it's the financial product from the finance team. How do you kind of get the various constituencies together to create an effective planning tool, whether it's the budget or the forecast or a strat plan?
Yeah, boy, there's a lot of, I'd say the number of balancing acts um, along that objective.
Yeah.
You and I have both dealt, no doubt, with the top-down approach to
Yeah.
budgeting, where it's the finance group and the CEO. This is the budget.
Yeah.
You've no doubt also done some bottoms up. And what I have seen with true bottoms up is the level of expenses rise to exponential growth when you roll them all up. And so the question is, how do you marry a blend of those
Yes.
that have, let's say, the appropriate dose of reality that a top-down model can have, married with the detailed understanding and input from those who are closest to the business, and capture the inputs of those that are truly operating that business, right?
Yeah.
So those are the points of tension. And it's almost like they're two ends of a continuum that you have to bring together at a midpoint. I think that both approaches have merit, and the specific merit of the bottoms up is to understand, okay, what is truly on their mind? What are they seeing in their business? What would they like to spend? And then have them be part of, hey guys, this is the total roll up, and this is what is likely reasonable. So, in the aggregate, each team collectively or in total submitted operating expenses of $20 million for the year. Let's just pick a number. whereas the top-down model had 15 million. And so each of you, either we need to look very carefully at where each of you may have gone, well beyond what is realistic. And we need to say, okay, if you had to rank A, B, C, D, what is something that you would say for the first X amount, if you turned in a budget of a million of that 20 million, what's the first 100,000 you would cut? What's the second 100,000, the third 100,000, the fourth? Because what that does is it forces them to say, okay, I don't have an unlimited budget. Kind of like my daughter getting married next March. Budget driven, because she then becomes a consumer. At any rate, those business operators then have to realize there are limited resources and I can choose what's most important to me because now I am part of the decision making. And that way, if you start at giving them, okay, tell us what you would spend, think you could spend, or whatever. Now here's the reality. What do you want to cut? What are you willing to cut? Right? I think you come away with a final budget. It's much more informed both from the top as well as from the bottom.
I love the side-by-side approach. Lovely, Tom. Well done. All right. As companies build, a strategy and we'll have a vision and a mission and their values, let's talk a little bit about the values of the financial organization. And as you
Sure.
said, large organizations, Tom, there are certain non-negotiables about the financial organization, which sometimes can be different, all right, or more heavily focused than other parts of the organization. What would you say those values are, Tom?
I think that, as I think about some key values, um, everybody hears about integrity and things like that, right? But going to the heart of the kind of organization that you want to build, I think teamwork is absolutely essential, a commitment to teamwork. I think a commitment to initiative is one that is a key value. In other words, if you have individuals in your organization who need to be told exactly what to do, they aren't likely a real fit and they aren't likely going to have upward potential. You want to instill in individuals the importance of taking initiative upon themselves, of you're not having to drag information out of them, but them producing good, solid analytics on a timely basis and always with a view to adding value because they're so close to that information. I think building the values around mentoring and coaching are really important to the extent that people are open. And this goes to the heart of the individual who needs to have a teachable spirit and
Yep.
one who wants to grow.
Yep.
If a person does not have that as a fundamental value or internal part of themselves, probably not a good fit for the organization.
Yep.
But if they are, one with a teachable spirit and really do want to develop, then having a commitment within that organization or a value that says, I want to develop those around me, those who either report to me or adjacent to me and so forth. I think that should be a fundamental value that organization, mentoring and coaching. And then just the strong commitment to interpersonal skills. I'm a big fan of Patrick Lencioni. His book called The Ideal Team Player,
Mhm.
Hungry, Humble, and Smart, where smart is more emotional IQ. That to me distills such an essence of key values of people that you want on your team and that you want in your organization. You want people who are hungry, not arrogant. You want people um, who are, you want people humble, not arrogant, hungry, in that they have a natural sense of urgency about them. They know that things are important to get done. They have a hunger for learning, a hunger to do more, a hunger to add value. And then finally, smart. Are they smart enough to read a room or the other people they are meeting with and say, wow, I'm getting negative vibes here. What did I just say? And then be smart enough not to say that again, or understand what's the emotional temperature going on here. So at any rate, those are the kinds of values that I would say are very important. That fundamental desire to always be learning, to always be becoming better, to always wanting to add more value to those I'm serving.
Love that, Tom. I love that. We would be amiss, you and I, if we didn't talk about two big things. That's the cornerstone of the CFO organization: credibility and trust.
Yeah, for sure.
Across, of course, across the organization.
Yeah.
So how does the office of the CFO maintain credibility and trust with the executive and the broader organization, especially in times of financial uncertainty?
Yeah, I would say that uh, candid, timely, and clear communication are
Yep.
absolutely at the top. No glossing over negative news.
Yep.
And the other way is to minimize the number of surprises.
Yep.
What I learned working with multiple or private equity, the number of times that I have, they hate surprises. They really hate surprises. Um, and when you do have a surprise, it's very painful for the CFO. Let's just say that. And so you learn to hate surprises as well.
And we can't sit down for like a week. That's just
Yeah, you're absolutely right. I mean, unless you put a pillow under. Um, so, you
uh,
know, I think that that goes to the heart of having a team who can produce good, solid forecasts. The problem is there will always be surprises, right? But you need to minimize them. And when they arise, you communicate them immediately. Um, I think that is the biggest takeaway in terms of credibility: candor, clear communication, timely communication.
Absolutely. Wonderful. Wonderful. I love that. And so, Tom, just as a part B of that point, as you're hiring, um, you know, your financial organization, even down to the accountants and the analysts, etc. Um, what are the non-negotiables when you hire them?
Well, that's evolved with my reading of Hungry, Humble, and Smart, or The Ideal Team Player by Patrick Lencioni. I'd say that all of those have to be in place. And he does a marvelous job in his book of
Yeah.
describing, nope, can't have one of three, you can't have two of three, you got to have three of three.
Wonderful.
Otherwise, it's not going to be a fit. They will negatively influence or be a drag on other members of the team, et cetera, et cetera. But in addition to that, I want someone with a natural sense of urgency,
Yep.
a high level of native competency and intellect, and a great work ethic.
Yep.
Uh, and I think that, uh, as you hire, let's say higher levels,
Yep.
that would be for anybody. But if I'm looking at hiring a VP of finance, let's say, I want someone who connects the dots. I
Yep.
don't have to point out how this relates to that, and why we need to be worried about it in the future. They see that themselves and bring it to me and the rest of the organization. So it is I think the level of maturity is clearly very important as well. Um, but at the foundation, hungry, humble, and smart.
Wonderful. Love that, Tom. All right, the home stretch. Reflecting on your own journey, Tom, what key lessons have you learned that you believe are crucial for aspiring CFOs to understand?
Sure. I think I've shared a couple of them already, and that is, you know, be a solution creator, not just a problem identifier. And also think 1 to 2 levels above where you're at if you want to, grow in your career. Because if you force yourself to do that, not only are you serving those who you report to better, you're preparing yourself for that position that you're aspiring to. So both of those, I think, are really critical. The one funny story I have about, the problem identifiers versus solution creators is I was at Service Merchandise. I led them, into a Chapter 11 filing, and we were in that 2 years before I left, and it was the hardest I've ever worked, without a doubt. And we were working on a complex solution for a real estate problem that we had during bankruptcy. And my team had developed an alternative for this solution. And we presented it to 2 of the bankruptcy attorneys, who went away and came back the next day and said, no, this doesn't work, and here's why. Okay. Went back to my team. Again, another solution. Went back to the attorneys. Oh, here's why it doesn't work. Why. So after the 3rd day of that, I called them in. I said, you guys are absolutely world-class problem identifiers. In fact, you're probably in the Hall of Fame of problem identifiers. But now here's what I want you to do. Because you are so good at identifying what's wrong with these solutions, I now want you to create a bulletproof solution and bring it to us. Yes. And all of a sudden, it's like, ooh, never done that before. And took them like 2 or 3 days, but they came back and they had created a solution. They had shot all the holes in it and found that it worked. So that is how you can transition people from just being problem identifiers to solution creators.
Wonderful. Wonderful. All right. Similar question. What advice would you give current CFOs to ensure they lead their organization successfully in today's complex business landscape?
Sure. Well, some of these we've touched on, some not. Certainly, they need to be excellent communicators, both oral, speaking, graphical, written, all across the board. Excellent communicators, committed to good, candid communication and clear storytelling. But the other is, they really need to be able to embrace some of the changes going on in the marketplace around AI. Understand what are the tools that are available that I need to be providing training to my team, and how do I create guardrails around their use such that there are certain internal controls around the use of AI. How can I bring it on board so that those tools are available without sharing sensitive financial information or other information about the organization, and yet still avail my team of the kind of tools that will sometimes dramatically improve their productivity and the ability to deliver work product. And I think, that is certainly one of the cutting edge challenges to the CFO role today. In saying, do I understand the tools that are out there? How can I harness them to make my team better, impact potentially even the analytics, decision making, and even the core accountabilities around financial reporting? I mean, years ago it was robotics process automation across accounts receivable, accounts payable. Now it can be, many areas of some of those core accountabilities. And certainly with FP&A, I think that we're probably on the cusp of a wave of being able to use AI in FP&A more effectively. So I think a CFO needs to challenge themselves with that, understand it, because the younger team members that they have, they're already using it in some capacity. So how do you harness that? How do you put limitations on it that appropriately protect the company? But some of the other basics, it's how do you get the values, the behaviors, the characteristics across your entire finance organization? How do you develop the leaders and your high potential talent to become future leaders? How do you train them to think at the next level above? How do you train them to become solution creators?
Wonderful. Tom, we've discussed quite a bit around clearly the soft skills of leadership here. We mentioned emotional intelligence a couple of times. I guess now the corollary to artificial intelligence is human intelligence. As you think about CFOs and the kind of financial DNA, Tom, what would you say, given your decades of experience, are possible blind spots or dark sides of the strengths of financial professionals that could thwart the progress of them individually as leaders and even the organizations?
I think the biggest is to only have a financial mindset. Shutting yourself off to the perspectives of that high driving innovator, the entrepreneur, shutting yourselves off from the head of sales or head of marketing perspective and not listening to it. Not being attentive to, the next big thing that they think can really, advance in a material way the performance of the company. And I think too, not being willing to hold the organization and those in it accountable for the things that they have committed to.
Yeah.
I think those can be the most significant impediments to really being a well-rounded CFO who must develop the ability to listen and to think through those other perspectives.
And as a coach, Tom, how would you, guide these professionals, aspiring CFOs, even current CFOs, to build that level of self-awareness to kind of understand I've got a blind spot that I need to work on, or maybe a limiting belief or so on,
Yeah.
right? How would you guide them?
I think I mean, I don't have a recipe for this one.
Yeah.
However, what occurs to me is sometimes just spending an hour alone and asking yourself, how am I being limited right now? How do my behaviors and my perspectives, how might they be limiting me in terms of other things I need to see or consider across the organization? And I think that period of self-reflection can open up opportunities for them to then change course if they feel they need to change course.
Fabulous. Tom, that's a dropping the mic moment. Fabulous. We should spend a couple of seconds listening to that. That's fantastic, Tom. All right, your parting advice to building a world-class financial organization.
Uh, you know, I would say that one, it's been a joy to have had the career and all the blessings that have gone with it that I have had. I'm very thankful for that. And I think that, gratitude goes a long way toward happiness. And the gratitude that you can express to others as you're building your organization, I think is just so important. Let people know you really appreciate what they do. I can remember one company I was at, the CFO never really gave much in the way of praise. I was the treasurer and big finance organization, 140 people. So this one person who was the female head of FP&A, she had on her phone, I was sitting in her office one day and we were working on something and she was going through a voicemail to try to find it to let me listen to it. And one came up from the CFO. to her. She goes, "This isn't it, but listen to it." And he was telling her what a fine job she had done on something. And she said, "Yeah, that was 6 months ago, and I liked it. It meant so much. I've just kept it on my voicemail recordings all this time." And
Listen.
the same guy told me, he goes, "Tom, you tell your people good job way too often. You got to cut that out." So, at any rate, I didn't listen to that at all. My view is people need to be appreciated. They yearn to hear you're doing a great job when they're doing it. I don't give compliments unless they're deserved. But I think all of us can take a lighter step and feel better about ourselves and when we are appreciated. And I think as you build a world-class finance team, truly appreciate, take the time to tell people that you appreciate them.
Beautifully said. You know, Tom, I cannot add to that. That's just such a beautiful ending to this 1 hour and a few minutes we've had here together, Tom. Really well done, Tom. I mean, you're a
Thank
tremendous
you.
human being. I've known you for decades now. You bring your whole self to your leadership positions, and now you're extending that to a broader community and part of your coaching, Tom. So, thank you for everything you've done. We've overlapped in our positions over the past couple of decades, and your influence, your gracious influence, still rings true. All those individuals who have had the privilege of working with you and working for you, it still resonates today. And I still hear a message. So thank you for everything you've done for the
Oh,
community
thank
and
you,
continue to
Richard.
do, Tom. Continue. And
Thank
we're
for
dear
the
friends. Thank you. This has been
thank,
tremendous.
hey, thank you for having me. Thank you for all your kind words. This has been so much fun, Richard.
Thank you so much, Tom. All the very best to you now.
All righty. You
Bye bye.
take care.
Bye
Yeah.
bye.